Let's move on to the next one with China. Some really interesting signs. Got to give credit to Peter Zeihan, who actually has long been talking about some of the strategic weaknesses inside of the Chinese economy. And we're beginning to see some things come through, even with their official data, which does not look good for them post-COVID. Let's go ahead and put this up there on the screen. This was just the first indication, very reminiscent of the Evergrande situation, if we'll all recall from a year or so ago, where one of the biggest shadow banks inside of China has missed dozens of payments. Many of their products, they missed payments, have grown to dozens of other entities. They have no current repayment schedule, and investors inside of China are freaking out. It turns out that there was all kinds of corruption that was going on inside. They've told their investors that the firm will be missing payments on batches of products on August 8th, adding to delays to multiple others. This is leading to what they say is, quote, a number of products. The company is now facing, quote, a tsunami of questions from their own investors, wealth managers. This is about billions of dollars of capital inside of China that touches all sorts of personal and industrial different investments. This is seen also, Krystal, on a bigger macro scale. Let's put this up there. They've actually got a decent chart that everybody can see. This is the Chinese stocks are actually slumping because economic gloom inside of the country is really spreading. They had a bump in January 2023, as you can see right there, up to 15%. That was largely reopening after their zero COVID idiocy. But things are all beginning to trend down, very much so, in the last couple of months. And actually, the fascinating thing was a new acknowledgement, actually, and this is the closest you'll ever get from Chinese leaders. They say, quote, there are new difficulties and challenges whenever it comes to China's economy. That was from the actual readout of the latest Politburo meeting just 3 weeks ago. And inside, all that people are pointing to is the index of Chinese stocks traded in Hong Kong down 9% on the month. The benchmark for stocks that trade in Hong Kong is down a similar amount. Amongst the actual members, the Chinese real estate firm is lose half of its value. That's Country Gardens, one of the biggest companies inside of China. The actual stock index for Shanghai and Shenzhen is down by 5%. All of this is indicating that even the real data that they can't spin, which, let's be real, is one of the most opaque countries on planet Earth in terms of the giant economies. You never know whether you're being lied to or not. That no indications are good. Also, if you think our real estate market is bad, home prices have fallen in 49 out of 70 of the major cities in all of China. The thing is that, and this really came through to me from the Wall Street Journal piece that we'll put up here. It was an op-ed, but I actually thought it was really interesting, is that the economic and the social contract is really fraying. We pointed to this in the Evergrande situation. One of the biggest, the deal with the with the CCP inside of China is they're like, listen, we're going to put you under surveillance. You're going to have facial recognition, all of that. We're going to do what we do. Our party bosses and everybody's going to get filthy rich, but you're going to get rich too. So don't worry about it. And that mostly worked. No more chaos, no more cultural revolution. We're working through this. Everything's great. It worked in the 80s, it worked in the 90s, worked all the way to the 2010s. But now that social contract is really beginning to fall apart, largely actually because of housing, which is a populist issue over there too, where a lot of people are unable in order to keep up with the housing market or are seeing their home equity go down. Then at the same time, you put their social problems in terms of the male-female mismatch. You put it together, an unemployment rate there, which seems very high. Nobody knows really exactly what the actual number is. There's enough social strife that this is causing real problems inside the Chinese economy. So another kind of tick, I think, in some of Peter Zeihan's analysis over the last couple of years on where China could be headed.
Yeah, I thought this was really revealing. Youth unemployment just hit, according to their numbers, a record high of 21.3%.
Disaster.
Which is a disaster. And the response was, we're just not going to release this data anymore from the Chinese government. They're like, you know enough about that. You don't need to know any more about that. So I think that's an indication whether 21.3% is the accurate number or not. I think it's an indication that, obviously things are really dire. And when you have a young population that isn't participating in the new prosperity of the country and has long had, similar issue to what young people here are facing, which is over the past number of years, they have really propped up the real estate market and made it so that prices were ever escalating, ever escalating, ever escalating, which obviously, if you're already a homeowner, that's great for you. Your value of your assets is going up and up and up. If you're someone who hasn't yet been able to buy into the market, this looks like a complete disaster. And so big picture, what has happened in China, I was listening to Martin Wolf of the Financial Times give some of this analysis. Initially the just astronomical growth that they experienced there was obviously led by exports. They're, building out their manufacturing base and all of the factories that they're famous for. That created this incredible growth. As that starts to wane and they sort of went as far with that as possible, then they invested massively in infrastructure, huge spending there, which also continued to, build out the economy. And once they took that effectively as far as they could, then the next piece was building up what is effectively now this gigantic real estate bubble. And so when we were covering Evergrande and also when we were covering Country Garden, effectively they realized, okay, this is unsustainable. We can't just continue in this direction forever. And we are pricing out so much of our population from ever becoming homeowners. So they started to try to let the air out of that market. And they've been doing it, but obviously is kind of coming crashing down. They had a good line in that Wall Street Journal op-ed as well that described the housing situation. They said ever since they started propping up this market, housing has functioned for many families as a combination of retirement plan, insurance policy, and stock portfolio. Endlessly rising housing prices and wealth have been a headache for young buyers and a driver of indebtedness, but also helped paper over gaps in the social safety net for middle-aged savers. There's another piece of this as well, which is obviously, they had massive COVID lockdowns. That was really devastating for the economy. And so the expectation was when they opened back up that they would restart this huge growth. And that's just the opposite of what we've seen. They're actually in danger of slipping into a deflationary cycle because residents there consumers are worried about the future, worried about the economic future, worried about their finances. So they are saving, they're not spending money. And so where we've had, massive inflation, which is starting to come under control, they're actually worried about the opposite impact, which is potential deflation, which can be really devastating. Now, the big question is this a blip? China's obituary has been written many times in the past. So let's be really clear about that. This could be a blip. It's very hard to tell exactly what's going on there. They could move forward and get back to, they're never going to get back to 10% GDP growth, but get back to some level of, significant sustainable growth. Or this could be, the start of a different trajectory that's very difficult for them to pull themselves out of.
There's also an alternative explanation, which is it's like a time of choosing inside of China because the U.S., at least the U.S., much of the Anglosphere, the UK, Australia have decided look, we're not going to necessarily economically decouple with China, but we're going to try to do our best. Now, I don't think we've done even close to enough, but it is starting to make its effect. Net exports and all that have decided to drop out of China overall to the West, which is hurting their economy. A lot of their economy was built effectively on exporting to the countries which they directly, not necessarily at war with, but, they use that rhetoric with those people. They see them as direct challengers. The thing is that, and the reason why I'm not yet willing to count them out entirely, they have got what we don't have. They have hard assets. So outside of oil, which they do have to still dramatically import, they've got an industrial workforce, they've got actual factories, they've got real stuff that comes out of their ground that they make stuff with, that they supply to the rest of the world. And as we found out with Russia, a financialized economy and all that, you can take the hit. They're having problems right now with their central bank, but they can still produce weapons. They can still produce stuff. We don't really produce stuff. So they have some structural advantages on their side just inherently by being a more recently industrialized economy than we do because we are much more of a service and a financialized economy than China. So I'm not yet ready to count them out, but I do think that some of the structural things that Zeihan talked about on our show and has been talking about and pointing there for a long time, which is very counter to the narrative that you will often hear about China, a lot of that is being vindicated, I think, in recent months. His population thesis is absolutely correct, and now here on the economics, it's very clear that, look, I don't know if China's going to collapse like he says, but if they have problems, that can still lead to, I've talked here about the Hal Brand's essay around China, where one of the things is that a state, when it's on its way down, and it sees that it near is its apex of its power, that's actually when it becomes the most dangerous, because that's when they're like, okay, well, now if we're going to move, we have to move now when we have the most advantage kind of on our side. You can think of Japan striking at the United States at Pearl Harbor. They're like, look, we've only got 18 months before we're going to run out of oil. We should strike them now so they can't strike us later on in the future. You can see very much how that type of calculus also could come in. So it's not necessarily good news, if you're hoping for peace and security around the globe.
Yeah, I mean, economic turmoil is usually not good news.
Yeah, it's bad.
For, for global peace and prosperity. There's a lot more we can say about this, and we'll continue to look at it in the future. But the last thing I would say is, even if China doesn't continue to grow at the pace that it has, even if this truly is like an economic turning point for them, which again is really up in the air, whether this is a blip or this is a longer term trend, I think the movement towards a multipolar world is going to continue apace, because you're still going to have, a huge power center in Asia, not just with China, but with other Asian nations. India is overtaking China in terms of population.
Already
There's
did.
huge growth there, and huge possibility for them that has not been exhausted yet. And you've got Prime Minister who's very determined to increase their industrial capacity. So there's a lot there as well. Obviously, you have Russia doing whatever Russia's doing and forming this new alliance. You already see the makings of a multipolar world. And I don't think whatever happens with China and their future economic growth, I don't think there's any putting that toothpaste back in the tube.
No question.
Hey guys, if you like that video, go to breakingpoints.com, become a premium subscriber, and help us build the best independent media organization on the planet.
That's right. We're subscriber funded. We're building something new. We want to replace these failing mainstream media organizations.
So again, to subscribe, it's breakingpoints.com.